Once again, welcome members, those and participants of this webinar for today. It's pleasure seeing a good number that is a good number logging in for this session. It means it was interesting and it's something that most of us would wish to learn about. So today training is all about trust. Yeah, trust fund management. And I believe most of us we have heard about trust, and considering that I believe some of us have a retirement benefit scheme, and you heard about what you call a trust deed and rules for the setup of scheme. So today we're going to touch on the trust fund, and with kindly allow me, I share my screen shortly so that we can start our session for today. At least you can confirm that my screen is visible.
Yes, Kuman, I can see your screen.
Okay. Okay. So, first of all, just to mention what my colleague has mentioned, my name is Michael Comet from Octagon Africa. And today we're going to talk about Octagon Africa. First of all, is that it was established in the year 2007 as a pension administrator for pension administration services. Along the way, we have expanded. That is today that we no longer offer only pension services, but also we have currently 4 units. That is insurance brokerage, trust services, training and actuarial consultancy services within the Octagon Africa. So currently we have expanded into regional offices in line with our dream Pan-Africanism, where we currently operate in Kenya, Uganda, and Zambia. And in Kenya, we have 2 branches, 2 extra branches apart from the head office in Nairobi. We have a branch in Eldoret and also a branch in Kisumu. So to start off today's session, I wish us we just think about something. Okay, we start with, I believe all of us, in whichever way, there's something that we may think about. Okay, for instance, I know in African culture, most of the people don't want to think about the death, but the reality is that people passed on. You may find that you were with someone today, you had a cup of coffee, but tomorrow you get a bad news about the same person. So that tells us that basically life is unpredictable. And if you think in that line, one of the things that you should always come up into your mind is that you have your dependent, or you have people whom you have been supported, either through education, that is paying school fees, or people whom either they were under your cover, that is if you have a medical insurance cover, or you have been paying for their medical expenses, or just those people who like all the time to be around them. Yeah, that is something that I believe most of us we find ourselves into. And if you think around that and also uh, ask yourself, who will take care of their need? Okay, if you put yourself in that shoe and then you remove yourself from that equation, they're just remaining. Yeah, I believe someone you have a picture of situation how to be, because it's most of the time we don't think about that, and things happen, and it's something that it need uh, a thought. Okay, that is the first line of thought that I would wish us to think. The second line of thought is, while we are still in alive, we accumulate some wealth here and there. For instance, in our employment, if you are lucky enough to have a pension contribution, you are saving to your retirement savings. Okay, uh, you might be having some policies, educational policies, and all that, which are with insurance companies. In the event of a line of duty, you may pass on. There is benefits which we normally get from our employers. That is, some of them is group life and all that. You are saving, yeah. You are saving in you are doing a saving in a circle or whichever that is mode of saving. Another mode of investment. Currently, we have what we call collective investment scheme. Last year, there was what we call a money market fund because high good interest, high returns, which were there. You put most of the people now open a money market fund. What happened to that savings? Yeah, if anything happened to you, yeah, what will happen to those one? So how have you planned? How have you planned for it? So today's session is, I know we might say that most Africans don't like to talk about it, but I think it is the right time to talk about it, how you can manage that. Because I remember at some point, while introduction of, if you cannot remember what is called the last expense cover, the one for someone in case of death, there is funeral expenses that come, you have the last expense cover. So what used to happen previously, you cannot, during the inception of that one, you could not sell that product outside in most places, in most of our Kenyan setup. Like there are places which you could actually, they know that if someone passed on, it become community function and all that and all that. Like everything need to be done by the community. But along the way, if you see the uptake right now for that cover, it is there's many good uptake in terms of most of the people are now embracing that aspect. So you find we need to change that narrative, and similarly, we need to plan our succession and all well to ensure that it can go over generation and generation. Yeah. So So the question that each one of us should ask ourselves is, how do I secure my wealth to support those who depend on me, to meet one, the healthcare, and also the education? Because I believe that is most of the things that most of us we are striving to achieve at the end of the day, to ensure that those who depend on us live a good health, they get an income or inherit an income generated asset, and similarly, they can go to good school even though you are not there. So that is a big question, and we are going to try to see what are now those options in which we can handle. So one of the things that we need to talk about is debt in service benefits. Yeah, this is the benefits. For instance, if someone passed on, you have benefits like group life, which is offered by insurance company, and most our employers, you find that they do have such benefits to employees. What we have, if someone passed on, you had the retirement benefits that you had saved with retirement scheme, and you find that sometimes when it comes to this distribution of this one, they rely on something. Yeah. For instance, if it is retirement benefits, they rely on what we call nomination of beneficiary form, which helps trustees in making decision on how to make this one, to make this benefit to the rightful beneficiary. So this is one of the things that benefits that arise. But now situation become a bit tricky. While you find that I think we haven't the only structure in place is that we this is a fiduciary responsibility that is given to the trustees. Yeah, it is upon trustees' discretion to make such decision, but you find that sometimes they may find that it becomes difficult because looking at what is provided is not sufficient. So they find that trustees will have be formed to do due diligence to ensure that this is at least paid to the benefits. Uh, Looking at what happened to now to your retirement benefits, we can start with retirement benefits. Okay, in the event of a member passed on, there are two aspects. One is that this we have said that this is fiduciary responsibility, or it is upon discretion of trustees to distribute the benefits. Yeah, for your to the beneficiaries. So it means there is something a document that they'll base themselves to make such decision. But in most situations, what happens is that our trustees of the scheme are unable to make that decision because one, someone passed on while still he had no any nominated beneficiary, or there were no nominated beneficiaries. And secondly is that you may find that this form is it is outdated. What does that mean? It means that if you can remember that you might came to, you are employed while still in, you just concluded campus, it means you are still single, but you haven't done anything to your list of beneficiaries. So who appears in your beneficiaries? Maybe your parents, and maybe along that is 10 to 20 years you have never updated it, and even your parents are no longer there. So it means that all the lists which are there become now there is no beneficiary known to that one. So that become a challenge to the trustees in making such beneficiaries. So it's good to ensure that we update our records at any given point or when there is any changes. A big question which normally people ask is what happened now to in the event in the retirement benefits, the people you have nominated are majorly, let's say, minors. Yeah. So for that one is that in nominating your beneficiaries, there are two things which are very important. One, in case there is guardian, it is there is minors involved, ensure that you have an appointed legal guardian. Yeah, the guardian will be responsible in in taking care of your asset on behalf of the children or the minor. However, the most appropriate tools which is currently being applied is opening what to trustees when there is a death and they identify there is minor involved. Despite, let's say, you are the spouse remain and you had nominated spouse together with the minor, the spouse will access his benefit based on the allocation, while the remaining benefits will remain will be the trustees will make decision that they transfer all the asset to what we call a trust fund, which you're going to talk about over it. So you find, so as a member or while still as a member of retirement benefit scheme, ensure that what you do what we call nomination of beneficiaries to ensure that don't to ensure that the rightful people will be able to get your benefit. Because let's be honest, is in the event that you passed on, yeah, you leave your wealth to either relative or something. I'm telling you for a fact that it will change the mindset of even the person whom you have left your wealth with. Yeah, if they used to if they used not to drive, immediately they'll start now thinking of buying a new car because with anticipation that this will help in commotion in moving from point A or point B. It seriously changed the mindset of individuals. So I think we all know how we should be having one or two experiences where you find that someone, we know these people they were left with something by the deceased, but along the way, if you check their life 2 to 3, 4 years there, all the assets are gone. But looking at the dependent of that deceased member, they are still in school. Others, you may find that they are being forced even to hold an arambe for them to meet the expenses of these children. So it's really a challenge, and that is why the aspect of opening a trust on behalf of the minors is very important, because this will ensure that these minors will continue with their education. They are guaranteed of their education, and similarly healthcare, because part of the things that we'll talk about is what are the things you should consider when setting up a trust fund. So what is this trust that we are talking about, that trustees opening a trust fund on behalf of the minors? So in simple understanding is that we can just compare trust fund as a safe deposit. Yeah, that is it's like a kitty where you put an asset on behalf of to hold that asset on behalf of, to hold and manage on behalf of someone. Yeah. So in this equation, we are looking at the minors who are now the beneficiaries. So these funds are put in a fund, which is we can consider as a trust, which you can consider that to be a deposit kit, whereby these funds are being put into, but it is managed on behalf of these beneficiaries. And it ensures that there is proper control and set up the usage of that fund until when these individuals are of age, so that will serve them for that one. So looking at it is that now we have a trust fund. Yeah, you have opened a trust fund. So a trust fund, for example, was open for, let's say it was a trustees open a trust fund on behalf of minors who are beneficiaries now. So it means what you can put in a trust fund, not only that retirement benefits, yeah, because that is only one. The other things which can be transferred into that trust fund, yeah, is group life. If there was any group life that was being anticipated to benefit them, you can have it being transferred to that trust fund. You can as well put group life benefits to be moved to that trust fund, as well as or any other employee benefit that was being accrued from the sponsor. And you find that for employer, it's become a good thing even to if there is, there is benefit and you can see the management of the beneficiaries of your, or that is one of let's say your staff passed on, and you look the family how that will be handled, you can easily make that decision and open a trust fund on behalf of the dependent. So you find, apart from having the retirement benefits to be put into this trust fund, you can as well have these employee benefits to be put into that the same. Other things is property. You find that trust fund can also hold the property on behalf of the beneficiaries. So you find even the management of that property, it is now transferred to the trust fund. And in this situation, this trust fund will be now responsible in property management. You may find that the trustees of that trust fund may not have the knowledge of the property, and what they will have to do is to involve or to appoint property managers to ensure that the property is managed professionally, but all the income generated from this property, all the expenses for this property is collected and put into the trust fund for those specific beneficiaries. So you find that even the beneficiaries will not have the hassle of going to managing the property because already all the operation and everything is being catered for through the trust fund. That is the trustees of the trust fund. Other things include the policies. When you find that there were policies that were maturing, you find some of us might be having an education policy and all kind of this kind of policy. So these are the things that can be added to the trust fund for that for the in behalf of that on behalf of the members. The other things is on savings. If you have savings either in SACCO or all that, you can as well be transferred into the trust fund. Now, for us, Octagon, we under the Octagon Trust Services Limited, one of the wings or one of the services we're offering within the Octagon Africa. Octagon Africa is a trust fund. So we have our trust fund is called Akika Trust Fund. So to give you the basic about the trust fund right now is that in Kenya, registration of a trust fund is registered with the Ministry of Lands, Housing and Public Works and urban planning. So ours we have registered with a certificate number of 3440621. That is to give you surety that we are not running a Ponzi scheme or it means that we follow due process. I know there are some proposals which with retirement benefits. I think right now they're in public participation. They would wish to have this one regulated within retirement to be regulated by Retirement Benefit Authority. So, but we have seen they have made they have made stride considering right now all if you are doing a trusteeship, you should be registered with Retirement Benefit Authority. So having look at that already there is an aspect of trustees being registered, of which Octagon Trust Services Limited is registered with Retirement Benefit Authority. So it means that we are playing the role in a professional manner because already we have aligned, comply with the regulatory framework. Right now, our fund that is what we are holding asset on behalf of beneficiaries is around 300 million. That is asset under management with over 80 individual trusts currently, that is trusts that have been opened with us, and over 150 in terms of beneficiaries who benefit from this fund. So this we have been in operation for quite some time, over 18 years that we have been offering these services. In terms of governance structure for this fund, Hakika Trust Fund, is that one we have it almost follows the flow for the retirement benefit, but however, in terms of investment, our investment is being handled by Gen-Africa on the segregated aspect, and then Jubilee for guaranteed aspect. In terms of custodian, who hold asset on nominee accounts with Stanbic Bank and I&M Bank, who are now our custodian. We serve as the administrator and the trustees of the fund, as well as accounting. However, over time, we normally consult one professional, because I've mentioned that depending on the asset we're holding, we need to have a consultant, one of them being an actuary, because we're investing this in almost similar to a retirement benefit. So we have an actuary who normally review our investment after every 3 months. So we are trying as much as possible to be in liquid, because remember, you're holding an asset on behalf of someone who was a minor. If this person comes attain the age, that is when they can make their own decision based on the Kenyan law. So anytime from 18 years, 23 years, they're able to come for the benefits. So it become very, very important to ensure that our assets are can be liquidated. So that is why we have an actuary. Annual basis, we conduct an audit. This audit to ensure that, to determine from the investment, from this asset we receive, we put them under investment. Are we earning any return from it? So you find that we have to do an audit to confirm what is going to be distributable to each trust or beneficiaries, and then property manager in the event we have and a transfer of assets which are in terms of property, or we need to have a such property manager. So you find these are now people who assist in running of the scheme. So when you are setting up a trust fund, there are 3 key elements that you need to look into. The first is why, what the purpose of that trust? How do this trust to serve, or what will be serving this purpose? So, for instance, when you set up a trust, let's say, for instance, you have transferred your retirement benefit to the scheme. What will be now the purpose of this trust? So, one of it is that you may set as a purpose that this trust will be used to meet my beneficiaries' education, healthcare, and upkeep. Because in the Hakika, what we do, let's say the beneficiaries' benefit were transferred, and this child would require to go to holiday, so, or they need to buy clothing and all that. So that will be considered under upkeep, and we will be running, let's say, for instance, the guardian, if they wish to get that upkeep for taking care of the kid, we'll have a sit down with the guardian. We agree in terms of the amount that they estimate it is enough for the upkeep of this child. And in the event we agree on that, we agree on how times you're going to pay. And this automatically we put them into what we call a payroll. So you find we have some whom we pay the monthly, the guardian, to assist in well-being of the kids. And most of the times we normally do it during the holiday, because let's say the child has been in the school, so in the school we pay school fees and maybe shopping, which need to be also shared for review by the trustees. Will have a look, so that to ensure that it is proper managed and it is actually reflecting the actual. So you find we have to review some of the things that we find out that there are people who are dishonest. So you find that requesting almost 100,000 for a shopping of a student going to high school or primary. So you find such things we need trustees to have a look at, to ensure that what we are paying for is mainly serving the purpose. So those are the purpose that need to say. What is the purpose of it? if it is paying a medical cover, let's say the children have a medical cover, they will have a medical insurance and they need to pay premium. So you give us instruction, will be able to facilitate that payment to your provider, to the insurance. If it is school fees, give us fee structure and we'll pay the fees to the school directly. So to ensure that that purpose that you have set, you must also be, we also ensure that that purpose is met or there is proper use of the fund. So you find, apart from transferring the money, you find even the guardian or who is taking out care of beneficiaries, we also have to have a discussion to ensure that the purpose you have set this trust fund is being met. If you say this will serve only for education and health well-being of the kids, that will be exactly the purpose. So we don't expect that because that will be in the document, not to call it a trust, is specify how that is going to be used. So will ensure that what the purpose is met. The other thing element is now the funding or the asset. So this is now what you give us, what is being placed into the trust. After you have set the purpose, we go to the second, which is now the what is coming to this trust. Is it only retirement benefits? Do we have those employee benefits? Are there property involved or anything? So you find that that is the second element to look into when opening a trust, to ensure that actually we understand what is coming into the trust fund. And then the last is, which is very important, who are the beneficiaries or who are these people intending to benefit from these funds or assets being invested in the trust. So once you have this one, you are good to go to open your trust fund. What are now advantages of opening a trust fund? One is that similar, this is a pool fund. So you find that we are able to pull from many trusts into one fund, which you are all seen. And once you pull this one, there is a element of economies of scale. As similarly as we are able to meet the liability that are coming. You'll not meet as individual, but you meet as a group of participants. Second thing is professional structure to provide advisory services to the beneficiaries as well as the help in management of the fund. I've mentioned how this trust is going to be managed. If you give us property, we'll get a property manager. In terms of investment, because we all believe that we may not have same knowledge of financial literacy. So you find that sometimes if I took this money and I wish to invest, I won't be able to know exactly where to invest, take advantage of what is happening. And that is why for us, even ourselves as Octagon, we believe this it was something that we could handle, and we got a professional, that is the fund managers who do the investment assets. We have custodian in place. So you find that in terms of professional management of this fund, you are guaranteed. Yeah. So that is the second benefit, to ensure that how your asset or your funds are being invested in a professional manner. It is advantage to have it being in a trust fund. Third is that when the beneficiary who attained the age, that is, he has completed the purpose of it, that is, he has met his education, they have been able to meet their day-to-day expenses, the healthcare is covered. Now it is time for them to reach, they have attained the age where they can have, that is from age 23, they can come to us. Now they close the trust. Yeah. But one thing, which I can assure you is that we have been in this service for some times now. Yeah. And I would wish to inform you that of all the trust funds that we had had, apart from, let's say, those trust funds that actually closed because of funding, let's say what was transferred was not enough to meet the education of the child until university, until complete education, those will have to close. But we have trust which their beneficiaries are currently above 30 years, others are, I think, 40, and they didn't close this trust fund. What does that tell you? That basically tells you that they now trust, they believe in how the trust is being managed, and they, because these are people, these are whereby you find that even because past 23 you just change the purpose, what will be used for this trust fund. So you find for them they just would wish to use that fund to be running their personal, that is home expenses like shopping and all that. So most going for holiday. So you find that for that it has already changed the purpose, but they are not closing it, or they are not saying we need our money back, because there are now people who can make decisions. They are continuing with this trust fund. They, despite their age, they didn't go for that option of closing. So in the event you find such a situation, that tells you that people now have belief in running a trust fund. And if there is something that you can leave your generation with, is a trust fund. Yeah, where it will go over and over and over and over and over. So you need that, consider that one, and that actually is a beneficiary because benefit to the scheme. The other thing is that how will you get an update in terms of investment performance of the fund? We confirm that in a trust fund we have a frequent report which we normally share with the guardians of the trust for each trust to ensure, and also we do audit at the end of financial year. We allocate interest and then we share similarly the statements so that you can confirm how much return. So when you transfer this asset, also know that it is not just coming to be used in meeting expenses. No, apart from being, we receive the funds, it is being invested, and what we receive from the investment are also distributed to those who are there. Uh, Number five is that this is actually one of the most viable way of managing the death benefits, you know, because because in the event of someone passed on, yeah, and you this benefit, you don't pay directly to, let's say, guardian or all that. If you put in a trust fund, it will be properly managed, and it will benefit your people who depend around you. And then lastly is that people, we conduct trainings in terms and counseling in terms of those beneficiaries. So you find that sometimes we are faced with situations that we are being informed because when we say we are the we are the one facilitating the payment of our of these beneficiaries. Sometimes we get calls from school about the challenges the child might be facing, and we are forced sometimes to get a counselor, put these children into counseling over time, at least until the time they recover, they're good to go back to school. So some come, for instance, that training, we counseling, we'll have to do it for free, despite others will have to consider professional. Let's say someone is going for rehab or anything like that one, we have to put it in either at a cost. So you find these are the benefits which come along with it. On most of our holidays, when these children are at home or when they are not in school, we conduct some trainings for them, financial literacy and all that, to ensure that there is that transition and understanding that their funds, how to manage and in the future. So it's very important. So in this trust fund, we have what we call stakeholders. We have, when you are setting up a trust fund, there are three people involved. One is the founder or the settler. Okay, so this is now the person who set up this fund. In most situations for a retirement scheme, they are normally set by trustees of the scheme. So that will become the founder or the settler of the trust fund. So in the event that you are setting it up, if you are still there, because there are two types of trust. There is what you call living trust, and there is for in debt debt in service trust. So for more for most situation, because most of our trusts we are holding are on behalf of beneficiaries which were left by those who passed on. So what we normally do is that for this one, they're being set up by this by the founder or sponsor, and then in it, for the purpose, they specify what will be the use of this trust, and then they appoint the trustee. And in this case, if you choose to join Akika, you'll be able to appoint Octagon Trustee Services to be your trustees. And then there is development of what we call the trust deed, which actually specify even the purpose of this fund. And from there, the founder will transfer the asset. So if it is organization, let's say, for instance, a organization opt to form a trust on behalf of someone who passed on, so they'll become the settler for that fund. But the second person is a trustee who now act as the legal owner or the legal owner of the fund, and they act on the best interest of the member. It is not for their own interest, but it is for the benefits of those beneficiaries. So the settlers specify the beneficiaries, and then they appoint the trustee who now become the legal owners. What you need to consider as organization when choosing that, you should check for registered trustees, because right now we have for you to be a trustee, you must be registered most by Retirement Benefits Authority. So these are the people who all asset on behalf of someone, and they act upon it on behalf of the beneficiaries. The last and the most important person is whom the benefit is entrusted for, and this is basically defined by the founder. So these are now they give us these are now beneficiaries, and with all the asset on behalf of this one. One thing which also need to be clear, in the event you have more than 5 beneficiaries, will not lump it, will have there should be in that allocation or decision that was made, each beneficiaries will be able to be allocated the portion assigned to him from the start. Even the income generated will be distributed based on that one. And you find that in the event one beneficiary, this is to avoid situation whereby we have a beneficiary who exhausts his own benefits and would wish to utilize that for the other beneficiary. So to avoid such situation, we always do the split, and that is based on how the settler has established, will allocate it to the same. So you find even our system is able to do the allocation. So you find that you should not be worried that in the event that one beneficiary utilize and finish for the other, you'll not be able to get it. So we play the role as a administrator as well as the trustee for that fund. So you find that we ensure that documentation are in place. Day-to-day operation of the trust, that is paying of payment to the beneficiaries, ensuring that there is proper maintenance of books of accounts. If there is any taxes that need to be paid, we ensure that this is done. If there is now a point that the trust fund has reached maturity, we are able to assist in dissolution and having the resolution foreclosure of that one. And then documentation, we ensure that we keep all documentation. If it is property related document, we keep that in place. If it is the benefits being paid to the beneficiaries, running the payroll, that become our responsibility of administrator. And on top of it is that we ensure that at the end of every financial year, the audit has been done by the independent auditor. We do the allocation of interest, and we dispatch a statement, which is normally done by a system that is reaching the members, and also to respond to day-to-day queries of queries for these beneficiaries. Sometimes we have to respond to schools confirming that this payment is done, or even these special requests that the student or people is requesting. We also have to liaise with them. And then trainings and consultation services we offer to the both. Even if it is sponsored, we can be able to offer the same. Investment structure of this fund is that we try as much as possible to be conservative. Yeah. Despite that one, we need to optimize the return. So how we invest is guided by what we call investment policy statement. Investment policy statement is normally generated by the insurance company, is normally generated by done by an actuary, and that is why I mentioned that there is an actuary who comes to audit our accounts on after every 3 years or on need basis when there is any. Let's say there is a new investment that we need to bring on board, so we have to consult an actuary to ensure that one. So in that investment structure, there's one thing that we try to strike. One is being to ensure that we optimize return, and at the same time, we safeguard the asset of the trust. So you find that we have to strike balance. And if you look on our stakeholders, those who do the fund management side, we have Jubilee. Jubilee handles the guaranteed aspect of it. And then we have the segregated, which is handled by Gen Africa. This is basically to ensure that we are protecting the asset. At the same time, we are optimizing the return from the segregated and liquidity, which is the most important, because we are running payrolls on monthly basis. And to be honest, there's no day we have failed over the service you have been, over the years of service you have been, there's no single day that you have not been able to meet the obligation of even paying this monthly payroll for the beneficiaries or meeting that liquidity expense. So that is what we try as much as possible to ensure we strike that balance. And for this is that if you can see our allocation for our asset, we have the segregated is around 39.5%, corporate bond around 0.3, government securities around 48.4. We have cash and cash equivalent, which normally fluctuate, and then equities of around 11.08%. So you find these are a very, very, very conservative fund. At the same time, which has helped us to meet obligation and at the same time give a good return to our trust and beneficiaries. So that is how we have structured our fund to ensure that we meet such obligations. So how does the process, how we handle the process is that in the event you wish to set up, once you appoint us as the trustees or the corporate trustee and of the trust fund, will be able to have it in place. The second stage will be now you give us the purpose of this. Why are you setting this trust fund? Will it is it for school fees, medical care and upkeep? So once you have that purpose in place, we'll proceed to prepare what we call the trust deed. Yeah. Once this trust deed is ready, we'll have the process of next, which is now being executed by the settler, who become now the sponsor or the trustee, and then we set up the trust fund, and the funds are being transferred to the trust fund. So those are the simple three-step stages. I've mentioned this. Who can who can set up a trust fund? One of it, I think, employers. If you have this group life and all this, you are able to set up a trust fund, because if you have this employee benefit, it means that it is on behalf, in the event of death of the member, these benefits are payable. Whom are you going to pay? So for employers, I'll recommend that you consider event of death and the beneficiaries are minor, and you wish to continue taking care of well-being of these minor. So you find that you can open that trust fund, and this trust fund will be set up with let's say, for instance, under Kika trust fund, the benefits is transferred there, and we still give you the option of managing. It's more like becoming the contact person. So you find that in this, all these requests, if there is requests which need to come to our for processing, these beneficiaries will have to come to the office, that is the office of the employer. That is, they send request, you either you review and then you confirm, then it comes to us, then we'll be able to facilitate. So it means that if you have such a benefit, you can do that, open a trust fund. Pension scheme trustees, I think this has been most common now, where trustees are opening trust fund on behalf of beneficiaries in the event of death. The other is individual clients. Yeah, we are looking into now going. Let's say you open, you as individual, you have something for you want to open, safeguard an asset for someone whom you consider in the family to be vulnerable. To avoid all these fights and all that arise in the family, in our families, you can easily consider opening a trust fund for such people to be able to assist them. The other is NGOs. Let's say you're having donations, whereby the donation and you wish to have it invested or to be used in a specified manner, you can open a trust fund within our Kika trust fund to be able, from what you receive, it is now considered to be the asset of the transfers, and then the obligations that the organization would wish to incur can only directly we can easily pay it from that trust fund, or we can easily meet that obligation, as long as it is very clear from the trust deed and rules that from the trust deed that this the purpose for this trust fund is this and that one. Others whom we have seen, I think this is common even in the Western. If you can look in the, I think I was looking at something for the Norway, whereby I think one of the leading trust funds, biggest trust fund of over 1.3 trillion in terms of assets, yeah, is being held in a trust. So you find that there are people who just philanthropists and families who wish just to set up a trust fund to be used for that can be transferred from generation to generation to generation. And one of the things which I saw even in Kenya is that we have the wealth people who consider to be wealthy also having a trust, yeah, running their property. So you find that even their children are unable to dispose what they hold, because they say in that trust they specify that this will move. You cannot dispose of property or anything, but you take the proceed from the investment. So trust fund is not very new, but it is something that need to be looked into or to be considered. Not even looking at the benefits, that is pension and all that one. You look at even your own personal wealth. You can have the wealth management of that wealth. So I've mentioned to set up is that step one is just to set up we prepare the document, which is based on what the purpose of that, the elements of the trust. Once this we have the trust settlement done, we'll proceed to the next of transfer of assets. So it is a very simpler process where for one to set up a trust fund. So what are the documentation that we might require in terms of for us to set up a trust fund? One, if it is pension scheme organization, we might need certificate of registration for the pension scheme or the institution. Second is the institution KRA PIN, and then the trustee resolution in the event it is a pension scheme for us to set up the trust. For those beneficiaries whom we are setting up the trust for, we shall require the beneficiary birth certificate for the minors. And in the event you want to have a trust fund for people of age, will also require their KRA PIN and also their ID. And then lastly, the guardian ID and the KRA PIN for setting up the trust fund. I wish to conclude. I think my time is almost up, so that we can take even question by we often take people for granted that are in front of our eyes, because we don't realize their true worthlessness unless they are gone. This is a reminder to cherish the people who are with you right now. Thank you very much, and back to you, Liz.
Thank you, Komen, for that insightful presentation. Members, kindly type in your questions in the chat section. So, Komen, I will start by addressing the questions that have been asked. First question was by Humphrey. He asked, is it acceptable to invest my personal pension in a trust fund?
That's a good question. When it comes to investment, I think that is basically general investment. When it comes to investment, what determine where you want to invest your funds is what is the intention of that. What is your intention when you want to save? Because if you are planning for your retirement, the best which I'll always advise is you consider opening a personal pension plan, or if you are an organization and you feel it's not enough, you can do an ABC. If you are looking to set up an emergency fund or something, it means that is something that you need that can easily be liquidated, and that is why you can consider that one opening a money market or this collective investment scheme. A passive income you're looking for, you can consider SACCO or invest in other. So it's not allowed for you to I cannot say it's not allowed, because we have what we call a living trust fund, which among them you can say you want to have education policy, and which you don't want to fully invest in a policy. So for that case, you can set up a trust within the trust fund and start and start saving over it. That is, in that trust fund, you are saving for that specific purpose. So you can set up a trust fund, which you can be making your savings, which is per se we can say it's similar like saving your personal pension plan, but will it be serving the purpose of a retirement? So if you want to take the advantages of because you not get exemption in terms of the tax relief and all that in the trust fund, you'll be taxed at payroll. So in the event you wish to take advantage of this taxation, it's good for you to open a personal pension plan where you can enjoy the tax exemption. For a trust fund, we rarely get that exemption in terms of contribution. Thank you.
Thank you, Comment. The next question is from Vincent. He says, does a trust fund earn interest? If yes, what are the percentage and the period after which the interest is earned?
Thank you. From my presentation, I've highlighted that we have the fund managers who handle the investment aspect of our fund, and their primary role, we have the guaranteed aspect, which is done by Jubilee Insurance, and then segregated aspect, which is done by GenAfric. So at the end of every financial year, we do audit. After we conclude the audit, we now allocate interest. So we allocate interest on annual basis, depending on declaration by the insurance company, that is our Jubilee Insurance, and then what we have received from investment done by our segregated asset aspect. Then we combine, we less the expenses that are payable, including the taxes, and then we distribute. I would wish to confirm that this fund, the average is around 11% for this fund, considering if you saw the conservative nature, and it is more consistent, more considering that we have the guaranteed aspect and this segregated aspect. So you find that fluctuation may not be that huge, that big in terms of performance we distribute. So this fund has really tried as much as possible to offer a good return over period.
Thank you for that. Jackson asks, can a person withdraw his or her money midway in case one doesn't want to continue with the trust fund?
Great. For beneficiary, let's say, you see, there are two aspects in terms of looking at this. Is that one, this trust fund is set by the settler, and in the rules it is for these beneficiaries. They can only access when they are of age, because midway for a beneficiary, where are you transferring this money, and considering that there is no legal contract that you can enter. This beneficiary can only access at age, that is when you are of age. However, it is in case you have a trust fund and you are the settler, that is individual. You set up your trust fund, and along the way you find that it is not working for you. You are allowed actually to terminate that trust. We facilitate the closing of the trust, and we pay back your benefits is paid. That is, the trust benefits is paid to you.
Thank you. Mercy asks, can someone access his NSSF contributions if the company remits the Tier 2 to Octagon? And if so, at what point can I access it?
Sorry, you mean Tier 2 contribution? Or okay, pardon your question.
Yes, she's saying, okay, if someone can access the Tier 2 contributions if they're remitted to Octagon.
Okay. Thank you. That I believe that is related to pension, but I'll be able to respond as well. When it comes to NSSF Tier 2 contribution, which is paid to Octagon, what happens is that there is what we call special rules. So we are running that similar to the rules of the NSSF. So you find that if it's come to our side, we are the same governing rules of NSSF contribution take place, whereby you can only access this Tier 2 contribution when you obtain the early retirement age, that is from 50. That is when you can come for your benefits. However, there are special situations where you can access your benefit, that is in the event of death, your beneficiaries can be paid, or when the employer retires you on ill health basis. So you find those are the options you can access your Tier 2. But as a member of Octagon, when you hit retirement age, you can come for your benefit as long as you have left employment. So I'm not saying that you are still in employment and then you feel like you are running short of money and you need something for emergency. So we'll not be able to pay that unless you are out of employment. Thank you.
Thank you, Komen. Jane asks, what percentage goes into managing the trust, and is there a cap legally?
I'll start with the cap. We don't have a cap in terms of a trust fund, but we recommend, at least for us to open a trust, let's say it's a retirement benefit or that is being or employee benefit, we normally recommend 500,000 and above for you to set up a trust, because the cost of, let's say you transfer 100,000, the cost of even, let's say in the next two you have some people people in school will be able to pay only for one or two, even the money will not be invested. So in terms of capping, we don't have, but we normally recommend above 500,000. In terms of management, we don't touch the management fee. We have all these service providers who need to be paid at the end of the day. So what we do is that we your principal, we never touch your principal to meet our expenses. The expenses will be a percentage of the fund, which is actually from the investment income. So when we are giving you 11% return, it means the expenses have already been removed or deducted from there. So let's say we get 13% expenses of 1%, you less the expense of 1%, and then we distribute the 10%. So we try as much as possible to be maintain our fee at the lowest level over maximum 1%. Yeah, the fee is around 1% for all. That will cover most of the expenses of this fund. So you'll never touch your amount, but it is paid annually. The fee is paid annually on the investment income and not on the funds you have transferred.
Thank you. There's another one from Emily Koyonzo. She's asking, do you have bonds? If yes, how does it work?
For this fund is that we are not like you come as individual with to purchase a bond. We don't have that one in our trust fund, because but the entire pool fund, we invest even in bond. And if you saw my investment allocation, we have about 37% invested in bond market, but it is for the fund, not for the individual. So if you are looking at a life bond, a life fund, let's say someone want to put the bonds into a trust fund, that is something as well we can consider. Or that individual wished us to be buying the bond on his behalf, so it find that would be a different arrangement, which I wish to confirm that we recently received approval in regards to that one, and very soon we'll be able to be rolling out. But it's something which for now it's not there, but you'd be able to see it, have it within our unit of investment.
I'd like to take a minute comment before I go ahead with the question and answer session, just to let members know that we also hold physical pension clinics for those who are close to retirement. These ones are usually physical at the end of each month, and I would like to use this platform to invite each and everyone of you to our next physical pension clinic, which is happening on the 25th of this month at our offices, which are at 8th floor West Park Suites, next to Parklands Police Station. So if you're interested in joining a retirement planning physical session, which is free of charge, please be sure to type in the comment section on the chat section, just write interested, and we'll be able to share more details with you. So thank you. Komen, I will continue. So George asks, is it possible to invest part of fixed assets like land in a trust fund?
Yeah, thank you. That is very possible. I've mentioned that we take that as an asset which can be accepted in the trust fund. So you find once we have this asset into the trust fund, we'll be able to assist you in terms of management, doing the property management. So you find that this would be now a separate. We landed it separately. That is outside the pool fund, because this would be now specific for a specific member. That is a specific trust. So you find there is such arrangement whereby you do charge to take that one into the trust fund as an asset, and will be managed for specific that member. It will not be for the entire pool, but for that specific trust. So that is possible. What we normally do in such situation is to, first of all, we need to have a meet. That is when we meet as part of our consultancy services. We understand the property, what is the intended usage, and if you need for development and all that, so that we are able to, even when we are getting for a consultant, we are able to know exactly what is need to be done for that property, and it means we'll manage specific that property. So it means even the fee itself, we need to agree at that point what be the fee for the property manager and for the administration of this one. So it's possible. It's something that we will consider.
Thank you. Ayo asks, can I start a fund when I'm still alive?
Absolutely. We have two types of trust. That is a living trust, whereby, let's say you come and set up a trust with us, and you say this trust, you specify the purpose for that trust, because I've seen where someone would wish to set up what called educational trust. Yeah, instead of going for policy, you see, for a policy, it is a contract, yeah, with insurance company, whereby in the event that there is a surrender value and all that, so you need to be consistent in making payment. If you default, I think there you'll see some challenge, just penalty, or you lose some investment. But if you open what you call an educational trust, let's say you open a trust, purpose is for educational trust, and you still save while you are still alive for that trust until the time, let's say you come, we have a discussion how much you need in the next 10 years. We see how, considering the fund and the return, we know exactly how much you save. You now save. In the event you are unable to continue saving, you'll not lose on the amount that you have saved. You'll earn that amount plus the interest resulting from it. And if you choose to access at that point, you are able to take take your money with no penalty at all, because it is more like an investment for you. And if you choose to have it until maturity, that is well okay, because at that, when it attain the time that we wish to meet that obligation, we are able to facilitate that payment. So it is possible. We highly recommend as well that people, if you wish to have a living trust, it is possible to do it within the trust.
Mercy has a follow-up to her question that she previously asked, and she's saying, when I retire, do I just get the contributions I made or more money?
When you retire, you'll get what you contributed plus the interest. That is contribution plus interest will be paid to you in that will be all the fund. Actually, it is like accessing 100% of it, both contribution and what you have earned as interest. And the good thing right now is that there is no tax. Yeah, most when you hit retirement and you access your benefit, there is no the aspect of taxation was removed. It is only applicable for those who exit before retirement age.
Thank you, Carmen. I see a question from Philip on the question and answer session. He says, confirm the amounts or assets in the trust fund continue growing or earning interest. I believe you've answered that. Then he says, are there specific rates you can quote? What are the charges incurred from your end?
In terms of specific rates, I've mentioned that I can't say we have specific rate that we are going to give, because it is at the end of every financial year that we see what we have earned from the segregated side and what the insurance company have declared. So you see, the rate has not been the same over the years for both guaranteed investment and also for segregated. But one thing I can confirm is that for this trust fund, considering the conservative nature, we have done an average of 10%. I think the lowest we have ever been was around 8%. I think it was in 2022, but we have never gone below 8. But the fund tries as much as possible to be conservative looking into liquidity and also taking advantage of a good investment from the segregated part.
He has a follow-up.
In terms of charges, we only the fee that is only is charged at the end of the year for administration of the trustee services of 1%, and this is payable annually, and it is not on the investment. It's not on the fund, but on the investment income generated from the investment.
Thank you. He has another question. What is the process of transferring or linking assets to your trust fund? Consider real estate, amounts in money market fund, government securities, etc.
Yeah, I believe for field, that is possible to have this fund transferred, but that it means that we have to have a sit down. We understand the nature of your assets, the usage of that asset, and then possibly how can we transfer it into the nominee account of the trust fund. So possibly, I believe this from this this is not the end of the discussion. We can pick up this discussion even for those who will be much interested into the trust fund for further engagement on how we can look at on individual basis, because a trust fund or a trust is not for a group, it is for an individual. So we bring, if you saw what in my presentation, I report in terms of trust. So which trust we have brought, so depending on the asset that comes, because for retirement benefits, if it just comes, it is just cash. So it means that you can be put into a pool fund. But for special, for instance, money market, that is also another cash, can be received as a cash into a pool fund. But for property or someone who wish to transfer a bond, it means those are specific for that specific trust, and it will be managed separately. So I think that's something that can be picked beyond here.
Thank you, Philip. We will reach out to you. So Jackson asks, what is the minimum amount required to start a trust fund as one, an NGO, and two, a family trust?
For minimum, for you to set up a trust, we don't have specific, we don't say we have a minimum, but we have a recommended amount. We are recommending 500,000 and above. That can be, you can start with 500,000. But for looking at the family, it will depend now on the need, because we not say we not accept any this money into the trust, but we look on the need. Because let's say someone is bringing in, let's say you want to start with 50,000, and you want that 50,000, you want to in the next 3 months, it already used to be pay, you want us to run to pay school fees. Currently, fees of Kenya is above even 50,000. So you find that it will be closed even before started. So we are not saying we are not accepting certain amount, but it will depend on the purpose. Let's say you start a family trust of 50,000 with 50,000, and you wish to meet an obligation of education in the next 5 years. So it means 50,000 is good, because we expect that we'll be doing some top up, and in the next 5 years you'll be having more than that will be close to 3 million. So you find that will be, it will make now financial senses in terms of that. So we are not really saying it is not, there's no amount, but we recommend that at least a minimum of 500 when you transfer. For instance, it is a retirement benefit, 500,000 will be able to meet this expense for some times. It will run the trust for some times. Yeah.
Thank you. Maina has a question on retirement benefits. He's asking, if you are on contract employment and above 50 years, can you access all your pension at the end of the contract?
Thank you. For retirement benefits, anytime from age 50 on any kind of exit. Let's say you exit employment for the when the contract's ended, or when you just choose to resign, or you have been fired, or anything has happened to you, as long as you are age 50, you can access your benefit in full, 100% of it. So that will be now the 50 years base is the retirement age considered by law. Thank you.
Thank you, Komen, and thank you to all the members who are interested in the physical training. If you haven't typed in interested and you want to join our physical training, please do so before we end the meeting and take our last two questions. So Jeremiah is saying, interested in the settlement trust fund setup. How long will it take once I have retired for me to get my benefits?
Thank you, Jeremiah. We can pick up that discussion. We'll follow up for that trust fund. But in terms of how long you can access your benefit when you hit retirement, by law, we are required to pay benefit within 30 days. However, depending on approval of internal processes, we strive to pay benefits, that's Octagon, within 14 days. 14 days.
Thank you. Last question is from Jane. She's asking, what's the guaranteed rate of return?
Thank you for investment under the guaranteed investment. Our minimum guarantee is we're given a minimum of 4%.
Thank you. Mercy says, thank you guys, informative session. I'd like to always be part of this. Thank you so much, Mercy. I've been seeing you also in various webinars that you're having. We're glad to have you and we'll continue inviting you. This is usually a monthly session. We have these sessions each and every month in collaboration with the physical sessions. For those who are interested, thank you for stating your interest. We'll be able to send you an invitation and the topic of discussion for the 25th of this month, which is the last Friday of this month. Komen, thank you once again for an insightful session. I don't know if there are any more people who would like us to, follow up with them if they want more information on trust services. If you've not been able to raise your question or you need more clarification from us, be sure to reach us out to via email on training@octagonafrica.com. I'll be able to type in the email, so you can copy it and reach out to us, and we'll be able to have maybe comment, advise you further. But thank you so much for taking your time and joining us today. It has been a wonderful session, and I hope to see you in the next one. So thank you very much. Have a lovely rest of the weekend, and may God bless you. Thank you. If you want to join us on 25th, then